I don't think there's anything coming to save Bitcoin. I think Bitcoin has to kind of either its merits are going to be seen by the market, and it's going to be bought, by players in the market, and they're going to take advantage of cheap Sats and a lot of the fast money washed out, and a lot of the parts of the ecosystem deleveraged, and then it'll climb its way up, and then once it starts climbing its way up, that of course gets outside money interested again. That's what makes it become fast money. Something's bottomed and rolling up. You get again the technical chartists that come in and say that's actually a pretty good chart. You get the momentum traders. You get the FOMO traders, and you get all the marketing around Bitcoin one day reclaiming 100K and then reclaiming all-time highs, and it just kind of feeds on itself. And until then, I think the asset just has to survive on its own merits.
The market doesn't always collapse with panic. Sometimes it simply stops believing. And according to macro analyst Lyn Alden, that's exactly where we are today. In her latest interview with Natalie Brunell, Alden argues that Bitcoin isn't waiting for the Clarity Act. It isn't waiting for a strategic Bitcoin reserve. It isn't waiting for Washington to save it, Wall Street to save it, or the Federal Reserve to unleash another historic money-printing campaign. Even worse, she believes Bitcoin is carrying baggage that many investors refuse to acknowledge. Years of speculative excess across the wider crypto industry, from ICOs to NFTs, venture-backed token launches, and eventually meme coins, have left behind a market that's drained confidence, exhausted retail enthusiasm, and continues to weigh on Bitcoin itself. What's perhaps even more uncomfortable is what Alden says comes next. While many investors continue expecting the massive liquidity wave predicted by analysts like Raoul Pal, Larry Lepard, and countless other macro bulls, Alden believes they're waiting for the wrong movie. Instead of a dramatic monetary rescue that suddenly sends every scarce asset vertical, she expects something far less exciting: slow, persistent monetary expansion that unfolds over years rather than months. That changes the entire investment equation, because if the easy money doesn't arrive in one explosive wave, Bitcoin may have to earn every dollar of upside through patience, conviction, and its own underlying fundamentals. In this interview, Lyn Alden explains why Bitcoin has temporarily broken away from its historic relationship with global liquidity, why speculative crypto may be dragging the entire sector down, why she isn't convinced new legislation changes Bitcoin's long-term trajectory, and why the gradual print could completely reshape expectations for the next bull market. There's a lot to unpack, so if you enjoy thoughtful macro analysis without the hype, make sure you hit the like button, subscribe to the channel, turn on post notifications so you never miss an upload, and let us know in the comments whether you agree with Lyn's outlook. Thanks for joining us, and enjoy the video.
Has Bitcoin's price diverged from M2 supply growing and liquidity? Because you did that long report with Sam on the correlation between liquidity and Bitcoin, but it seems like there's been a little bit of a divergence.
Yeah, when we did that study, we found that 83% of the time, Bitcoin goes in the direction of global M2, and 17% of the time it diverges. This has certainly been a time where it has diverged. I mean, global M2 overall has been pretty decent. It's not been soaring, but it's been to the upside. And this has been, pretty rough period for Bitcoin, obviously. I think some of the reasons for that are, one, I do think that some of the price action we would have seen in Bitcoin instead showed up in the MNAVs of some of these companies. When Strategy was trading at 3 times MNAV, Metaplanet was trading at like 8 times MNAV. That all else being equal, if those are trading at lower MNAVs, and just more of that enthusiasm poured into Bitcoin itself, we probably would have seen a somewhat higher high this cycle. But I think it's not, I think, an accident that the kind of the bear move we've seen in Bitcoin starting in autumn of 2025 aligned with that prior capital drain I mentioned for AI stocks. So as soon as kind of the hyperscalers free cash flow started to collapse and everything kind of shoved into those memory stocks and the other kind of like chip stocks out there, I do think that trade was so powerful that it sucked liquidity out of multiple places, probably including Bitcoin, because a lot of investors were just kind of looking around and saying, well, this is, it's a decent asset. It's not soaring, but these other things are just going straight up. So I think that they became, at least temporarily, the fastest horse in the race. So that was kind of the new proxy for just things you want to own. I think another thing kind of weighing on Bitcoin is the broader crypto space which I've been structurally bearish on. This is the first cycle where they didn't really get a cycle. And moreover, I think that there's a kind of an increasing widespread view, which goes back to what a lot of Bitcoiners were saying, which is that there's really no there for outside of Bitcoin, outside of stable coins. I think the vast majority of the rest of that space, some other things, you can tokenize gold, you can tokenize real world assets. I mean, there's a market for that. But once you get into like really circular speculative things, there's just not a lot of structural demand for it. They go through a hype cycle after they're invented, and then they stagnate. And when you have like a multi-trillion-dollar stagnating structure around what is otherwise a good asset, I think that weighs on it because there is cross ownership. I mean, there are people that own crypto XYZ that's just down 90% or whatever, and they also own some Bitcoin, and many of them will have to sell Bitcoin for various reasons. Outside capital that hasn't gotten in yet looks and just sees meme coins, and we kind of went through like the narratives. There was like ICOs, there was the idea of DeFi, there was NFTs, there's just compute on the blockchain, and then it kind of just like, there was a lot of VC pump and dumps, where instead of a VC investing in a company and generally having to hold it for 5, 7, 10 years until they get some sort of professional exit, either the company that they invested in gets acquired by a serious company that analyzes it, or it manages to go public. Instead of that, you have VCs that are, they lock up for maybe 2 years, and then they're able to dump on retail, even if the underlying product itself has little traction, or the traction is so obfuscated by speculation of the token, that they walk away rich, and then the thing just kind of rolls over and collapses. And then this final cycle was basically just memes. It was kind of like the end stage cycle, which is no one's even claiming there's actual value there. It's just like player versus player. How hard can you bid something up and get out before it pops? And
but
I think that,
including our president,
yeah, I think that, and I think that does weigh. I think that the crumbling crypto kind of just market out there does somewhat weigh on Bitcoin. I think it's inevitable. I mean, I think that has to gradually fail over time back closer to a total addressable market, which again, outside of Bitcoin and stablecoins and a few tokenized real world things, I think is very small. And I think that's kind of weighing on Bitcoin, even as other parts of the liquidity are decent.
Do you think that the Clarity Act is going to get passed? Because I'm a little bearish on it actually happening this year.
I don't have a firm view. I'm kind of watching like that play out like anyone else. But I still, again, I think that while some of the aspects of it are useful, I think what really benefits Bitcoin is just simplicity, just like protections on letting people self-custody it. Ways to spend it in kind of de minimis ways that are not taxable to relieve the accounting burden, and things like that. A lot of this other stuff is more financial institution stuff, which is fine. But I think the market always wants the next thing. Like I remember, one of our podcasts early on in this new administration was about the strategic Bitcoin reserve was brought up. And either on your show or others, I tended to fade it whenever it was asked. I mean, obviously it has to be asked because it was the thing of the time. And my view was, I think they're going to ring fence the Bitcoin they have, probably. I wouldn't bet on them just buying a million coins or anything huge like that. I'd rather be surprised at the upside than assume they're going to do that in my forecast. And yet there are a lot of people that were super hyped up about it. And I think we're kind of maybe not quite that situation, but I think that while investors are going to watch these things, and while especially certain companies have to watch the passage of this legislation, I don't think there's anything coming to save Bitcoin. I think Bitcoin has to kind of either its merits are going to be seen by the market, and it's going to be bought by players in the market, and they're going to take advantage of cheap sats and a lot of the fast money washed out, and a lot of the parts of the ecosystem deleveraged. And then it'll climb its way up. And then once it starts climbing its way up, that of course gets outside money interested again. That's what makes it become fast money. Something's bottomed and rolling up. You get again the technical chartists that come in and say that's actually a pretty good chart. You get the momentum traders. You get the FOMO traders. and you get all the marketing around, Bitcoin one day reclaiming 100K and then reclaiming all-time highs, and it just kind of feeds on itself. And until then, I think the asset just has to survive on its own merits. It's the most liquid way to store and send,
Mm-hmm.
permissionless value. It's a strong money in the digital age, and I think those fundamentals are what allows it to make higher highs and higher lows through bear markets. And from what I've seen, I mean, I've seen way weaker sentiment this bear market than the 2022 bear
Yeah.
market. We were at Pacific Bitcoin in 2022,
Yeah.
and energy there was high. I mean,
Yeah.
Bitcoin was crashing to like 16,000. Energy was still very high. I think the combination of the broader crypto space, like truly running out of like good narratives, or at least like temporary narratives that hit in some way, combined with that this wasn't a very retail heavy cycle, it was more of a corporate cycle,
Mhm.
and then kind of the fact that Bitcoin just didn't reach the highs that many people thought, is just disappointing for a lot of people. So this is the lowest sentiment that I've personally seen on Bitcoin.
One of Lyn Alden's biggest arguments is that Bitcoin's recent weakness isn't simply about macro liquidity anymore. She believes capital has been pulled toward AI and semiconductor stocks, while years of speculative excess throughout the broader crypto ecosystem have created lasting damage that continues to spill over into Bitcoin. In her view, the collapse of narrative after narrative from ICOs to DeFi, NFTs, and eventually meme coins has left many investors questioning the entire space, even if Bitcoin itself remains fundamentally different. But perhaps the most surprising part of her outlook isn't her criticism of crypto speculation, it's her view on money printing itself. While many investors continue positioning for a massive wave of liquidity that could ignite another explosive Bitcoin rally, Alden believes the monetary backdrop will likely evolve much more slowly than most people expect. And that changes how investors should think about the years ahead.
Well, the update is it has been a gradual print. Like,
Yeah.
we did that in, I think it was September of last year.
Yeah.
The balance sheet is not much different than it was back then. For a couple months it kept going down, and then of course they did their December. They ran into those liquidity problems, so started increasing it.
Mhm.
It has been a gradual print. I expect the gradual print to keep happening. When the Iran war broke out, that was kind of the first real test of the gradual print, because it's like, well, I mean, people were worried about like $200 oil, and it's like, well, what if the worst case scenario happens? I was like, sure, if certain worst case scenario happens, we can breach above my base case gradual print. That's what major crises and wars tend to do. But I
Mhm.
was like, I wrote at the current time, nothing about this conflict leads me to break out of the gradual print base case, and we haven't. Um, and at the current time, as we sit here recording this in early July, when I look over the next several months, I don't really see anything that would deviate my base case away from the gradual print. So we have broad money supply gradually grinding upward, but not at an unusual pace. Banks are
Mhm.
making their fractional reserve loans at a kind of a moderate pace. That the Fed is increasing its balance sheet at a pretty slow pace. Especially, they actually slowed it down since tax day, which they basically announced they would do. The new Fed chair claims he wants to reduce the balance sheet. It's hard to do. It's not impossible to do, but it's hard to do. Generally speaking, if they're going to do it, they have to kind of stuff more treasures into banks on average. So they have to kind of make it easier, or incentivize banks to be able to hold treasures more. That's kind of a liquidity neutral move anyway. So I generally would take the under on the idea that they're going to like radically cut the balance sheet. But they might find clever ways to just have a slower print than, say, if Powell had another term, for example.
Mhm.
Um, and so, yeah, I view the gradual print as still in play. None of my current investment theses, whether it's certain stocks, whether it's Bitcoin, whether it's gold, whether it's XYZ, is contingent on some massive crisis and huge print around the corner. Instead, it's hinging on fiat currency is going to keep debasing. You generally want to own scarce, high quality assets that are leaders in their category at levels that are not super euphoric or overvalued. And of course, the way you value a stock is different than the way you value a hard money. So it's different metrics, and investors will apply what they think is right. But yeah, owning scarce, high quality things at low or mid sentiment and good valuations is how I approach things.
Lyn Alden's outlook may sound pessimistic at first, but it's actually built on something much more durable than short-term optimism. Her message isn't that Bitcoin has failed or that its future depends on governments abandoning monetary discipline overnight. Instead, she's arguing that the strongest assets shouldn't require constant rescue in the first place. If Bitcoin truly is digital hard money, then its long-term success has to come from the value it provides, not from endless headlines promising the next catalyst. That also explains why she isn't placing enormous weight on legislation, strategic reserves, or hopes for an aggressive return to quantitative easing. Those developments may eventually help around the margins, but they're not the foundation of her investment thesis. She believes fiat currencies will continue to lose purchasing power over time through gradual debasement, not necessarily through spectacular crises. In that environment, investors should focus on owning scarce, high-quality assets, while sentiment remains weak instead of waiting for a dramatic turning point that may never arrive. Perhaps her most important observation is psychological. Bitcoin has survived periods of disbelief before. Markets eventually rediscover assets that continue improving while weaker narratives disappear. If speculative excess keeps washing out, leverage continues leaving the system and patient capital slowly replaces fast money, then Bitcoin can rebuild exactly the way it has throughout its history, not through hype, but through fundamentals. In Alden's view, that's ultimately the healthiest foundation any bull market could have. So despite the cautious tone throughout this conversation, Lyn Alden is not giving up on Bitcoin. Quite the opposite. She simply believes Bitcoin's greatest strength has always been its own resilience. It doesn't need to be saved by politicians, legislation, or extraordinary money printing. If its monetary properties continue proving themselves over time, the market will eventually recognize that value on its own, and when it does, momentum, institutional capital, and retail enthusiasm are likely to follow once again. If you enjoyed this breakdown, don't forget to leave a like, subscribe to the channel, share this video with someone following the Bitcoin market. Thanks for watching, and we'll see you in the next video.